Hi, everyone. Welcome to the panel, FinTech for Financial Inclusion in Asia. I'm Eman Lau, the Managing Director of Linfeng Capital. Linfeng Capital is a FinTech-specific fund very active in the Greater China region and increasing worldwide. I'm so excited to be invited to be the moderator on this hot and meaningful topic panel. And more, we have star panelists today, including David Wan, co-founder and CEO of HeliCap, which is an alternative lending platform and sustainable lender backed by leading financial institutions and venture capitalists. Before HeliCap, David founded tech-focused investment firm 33 Capital and worked at most any and other very well-known banks. He also loved to create innovative HR policies. We also have Mahdi Hassan, the founder and group CEO of My Cash Money, which is an online e-marketplace specifically designed to offer easy, secure, and convenient online financial services for the migrants in Singapore, Malaysia, and beyond. There's great passion to help the foreign workers to enjoy financial services and other services like tickets, mobile top-up, and remittances. Last but not least, we have Mr. Widwan Aziz, the president of the FinTech Association of Malaysia, which is a national platform to support the country to be a leading hub for FinTech innovation and investment. Widwan is also a serial entrepreneur himself and sits on the boards of many FinTech startups, including lending and investment. We're very, very excited, about today. And first of all, please allow our panelists to introduce yourself and your work. Thank you. May we start with David, please?
Hi, everyone. My name is Dave, co-founder and CEO of HeliCap. Very delighted to be on this panel today and to share some of our thoughts in the market. A little bit about myself. I started my career at investment banks, Morgan Stanley and Nomura, and I left about 4 or 5 years ago to set up my own VC company and investing in FinTech and e-commerce space. And in 2018, we incubated our own business, HeliCap. Very excited. And HeliCap basically facilitates to underbanked and unbanked and MSMEs and individuals in Southeast Asia. And we are trying to cover a $500 billion funding gap that is affecting 300 million underserved in the region. So we're very excited to do so. And we have actually created, in the last 2 years, our own credit analytics platform that sits at the heart of our solution. We provide credit and impact insights into loan portfolios at a granular level. We process large volumes, millions of data points, and summarize them within seconds. This saves our team a lot of time. And we have used this credit analytics for our business, where our subsidiaries have 2 MES licenses, where we help investors to access this area. So very keen to share what we have learned the last 5 years in this space. Thank you very much.
Thank you. May I invite Mahdi?
Hello, hi, good afternoon. My name is Mehdi. I'm the founder of MyCash Money. So MyCash Money is a platform for the migrant workers. We are licensed in Singapore and Australia, and we mainly offer services for the migrant workers and provide them a way to send money home cheaper and more flexible. And apart from that, our service actually is available in the mother language. So it is very much flexible for them and very, very convenient for them to use it. And we have around 150,000 customers in 3 countries, and we are now expanding to the Middle East. Yeah, thank you.
Thank you. Withdrawn?
Thank you, Edmund. Nice to be here with David, Mehdi. It's very, exciting to share our journey in Malaysia, especially from the FinTech Association lens. A little bit about myself. I started my career as a financial regulator for 10 years in Malaysia. And then, funny that David mentioned that he was in Nomura. I was also in Nomura last time, as well as in Macquarie Bank. And then I started my own businesses back in 2013. And now having a few businesses in remittance, in digital asset exchanges, regulatory consulting, as well as in robo-advisory as well. So happy to share what we have learned so far and learning from others as well throughout this session. Thank you. Over to you, Edmund.
Thank you so much. And a few words about Linfeng Capital. We invest in all sorts of technologies in financial industries and fintech area. And I'm trained as a technologist myself. Has been in TMT banking and fintech and technology investment for many years. So besides work, I'm also a board member of the SFF Association of Shenzhen, board member of the Hong Kong Business Angel Networks, and also the co-president of the Hong Kong Internet Institute. Really excited to learn from all three of you on financial inclusion, and Cecilia, we look forward to working with you as well. So may we start with the general questions? You guys are very experienced in financial inclusion and see the development for over like a few years for the unbanked and underserved banking population. But what is it exciting you most or frustrating you most about the current state of financial inclusion in ASEAN? Maybe Rizwan, do you want to start first?
Yeah. Thanks, Edmund. I think it's really exciting for me to look at the theme of financial inclusion, especially for the unbanked and underbanked. I look at it more of the unserved and underserved because banking as it is, there's a lot of legacy issues that the incumbents are having. And there's a lot of fintech solution and fintech companies that's trying to fill in that gap. And these noble initiative, either by the incumbents as well as by the fintech companies and many other innovative businesses, are really great in terms of making sure that financial inclusion is at the core of all these initiatives. But what frustrates me are sometimes the lack of understanding at various level and different stakeholders. One is from the policy side in terms of how different government look at it, and let alone talking about how that can be a common theme in ASEAN. Talking about it and discussing about it at a policy level, it's relatively easy, but making it as an actionable item is something that is very challenging. Unlike the EU, where they have a common legislation and framework that they can work together, ASEAN is basically different kind of countries, different kind of languages, and different kind of culture that we need to not try to harmonize, but try to find common platform where we want to start. So that frustrates me. And secondly, in terms of trying to get the action items going, I think sharing of data is one of the key issues that everybody is having, and everybody is a little bit anxious in terms of when sharing data become a topic of discussion, either at a policy or even at the actionable item level. Yeah. Thanks for that. That's my thought.
Yeah, totally agree. I think with the enforcement of GDPR in Europe and following by other countries, I think that will be one of the key topics that we can solve as a technology, startups. So, David, do you have anything to add?
Yeah, I mean, this is a question that's quite close to our hearts. I think in Southeast Asia, we have about 400 million adult population. Our research has pointed that about half of them, actually, there are 100 underbanked and 200 unbanked. The unbanked is a much more difficult problem, I would say, but the underbanked is where we focus on because they basically may have bank accounts, but they don't have credit. And then there are also 70 million MSME in Southeast Asia, right, which constitutes approximately 40 to 60% of the GDP. So this is a really big space, but the problem is, despite the significance to the ASEAN economy, these MSMEs are very prone to challenges posed by, COVID, globalization, technological advances, and competition from larger businesses. And yet, if you look at the banking space we're in, a lot of the banks are not very well penetrated into these local regions, and they don't provide a lot of services. I think risk-taking is still not very well understood, and banks are more comfortable operating in the cities or doing what they know best. So I find that's a bit of exciting, but also frustrating. But we are seeing banks start to work together with telcos, together with big tech companies or even apps to access customers easier. And I think you can see Gojek, for example, and even Grab start to go into financial services. Sometimes you need a bit of disruption to wake the beast, as you call it. But I think that there remains a lot of work for existing players in the market. And to be honest, it's a very new space. It's only maybe 5 years old. It takes a lot of time to change infrastructure that's been around for many years. So I think, one has to be patient as well.
Absolutely. It takes time, especially we're talking about infrastructures establishment. But we may come across it, but with the penetration of mobile phone, it seems that some of this area at least is changing. And Mahati, do you observe the same?
Yeah, definitely. Actually, because I think because our services is for the migrant workers, the community both in Malaysia, Singapore. So I'm working with this segment for almost 5 years, and I have seen that the situation is actually even worse for this segment of the people because their earning is very, very low. So most of the time, the banking and financial institutes are not very keen to serve this community. So they became actually underserved or sometimes not served at all by the financial institutes. But thanks actually to these fintechs, actually a lot of fintechs companies coming up in every countries now to help the migrant workers community and actually and this actually improving their lives also. For example, in Singapore, we have been working during the COVID time because a lot of the migrant workers were stuck in the dormitories. They can't go out actually. So we start to work with Ministry of Manpower to provide them remittance services inside the dormitories and teach them how to use our app, all these things. So it actually definitely helps them, but it will take some time actually. And hopefully one day they will be also as a part of the in the circle of the financial community. Yeah, thank you.
Sure, thank you. Yeah, I think as the banking services can be provided more cheaply and more efficiently with technology, hopefully we can include them as part of the serving community. And we all very excited of the recent technology development in the past like 10, 15 years of mobile technologies, of smartphones, on AI, data analytics, etc. So how do you see the roles of technologies in financial inclusion? And from your experience in managing startups and in association, what technologies or talents do you think is most at this moment? David, can you start first?
Yeah, I think we're at a very interesting period of the time where you have what we call a lot of technology in the space, a lot of capital going to startups and technology firms in order to, to have a different kind of commerce, right, which is mostly done on the mobile phone these days. And with that in mind, for example, if you are in a bank and you're going to do underwriting of credit, right, you have your old matrix. Let's say you have 1 to 50 things you look for, and suddenly you have to look at another 50 things: analytics, trend spotting, verifying a user, where is his footprint, where does he eat. And a lot of marketing companies are using this data to do advertising now. So the footprint can be trailed, and you can then make a call, right, on the consumer that you want to lend to. The challenge here I find, and the reason we built this company, is all of this data is really messy. It takes a lot of time. Let's say if you have 10 million customers and each of them takes a loan and you have 10 million loans, it takes a lot of time to sort through, make sense of it, risk score. So I think it really requires a full ecosystem, right? Not only just a whole platform of capital, but you also need the scoring system, you need data extraction system like ours. And what you need to do is to really make sense and to know your customer's footprint in order to give you the confidence to want to do business with them or to service them. And I think this system to score is very important. And I think we will start seeing banks work very closely with fintechs. And I think in this festival, there's a lot of themes of that happening now, where institutions are working very closely with incumbents to do that. And I guess the second point on the talent part, I think it's very important for commercial teams, and also since we're looking at financial inclusion, also it may be part of a foundation or non-profit element or a corporate governance / corporate endeavor. I think it's very important for the team to sit together and craft some kind of mandate, some kind of criteria where they can track, they can have corporate governance, and they can really allocate capital to the space that needs it the most. And obviously, in order to do that, the space must also present a valuable proposition in terms of the return, because there must be a balance in terms of what we call sustainable finance. So I think these are areas that are quite important.
Thanks a lot. And Mahathir, may I take your brain on what kind of technologies do you think is mostly sought after and talents as well in your country?
Yeah, definitely. If you see that, like 10 years ago, if you want to do remittance, the only way to go to the banks, or either go to the branch, or then a few days later it is start to offer through online, like you can do now. It's online banking. So, but the last 2-3 years, you think that the things are changed dramatically. Now nobody uses banks for remittance anymore. Actually, they're using like TransferWise, even Instagram, even MyCash. Us actually, we provide the innovative app that doesn't need a bank account at all. So the technology is actually change everything. So for example, like I was yesterday, I was talking with my team. So last time in Singapore, the remittance was totally different. Migrant worker, they get salary mostly cash or deposit, or they withdraw from the banks. Then they will Sunday morning, all of them they will go to this Mustafa Center, Little India or Lucky Plaza area, queue up and send money. So that was the only things happening last 10 years. But now we are changing that. If you check our transaction data, you'll see that every day now they're sending money. So they get the salary, immediately they send money. They don't wait for Sunday anymore. They're not going to Mustafa Center or Lucky Plaza anymore, actually sending remittance. So the technology is changing their behavior actually. And I think that this will actually improve in the future and will bring more convenience, more security, and of course, more benefits to them. Yeah, thank you.
Yeah, thank you. Yeah, I do remember the scenery of Lucky Plaza on the remittance, piles of people. And Uchran, do you have any other insights on that?
Yeah, I think I just want to add that between tech and talent, there's also another sub-element where you need to also think about the mindset of the people or people who are either at the bank or people who are providing these services. So let me start with the technology. I think technology, it's very clear that big data analytics, AI, and together with cybersecurity are are the key components for financial inclusion to be effectively implemented, no matter where it is, especially in ASEAN, because we have different, as I said just now, different countries and cultures. And then on the mindset, I think lesson that we've learned from the recent cases of certain failures of big TechFin or FinTech companies. I don't want to mention the name because I think we know who they are. It's not the failure of the technology, or it's not because of the failure of the talent in terms of delivering the services, but this is in terms of how they lack certain understanding, especially practical understanding, in terms of how they practice governance in these kind of companies. They rapidly enhance and expand, but they forget about how to govern themselves and how to govern the behavior of the key people in the company that they run. And this is where they lose the credibility and the trust of the very people that they serve. And then when you look at the talent, I think going forward, especially focusing on financial inclusion, we need people that has the socio-economic innovator approach. And this is where David talked just now about the ESG-based kind of financing. And this is where also some are trying to look at where we can have the triple bottom line approach in terms of running a business, focusing on profit, focusing on people, and focusing on the planet. So it is summed up by the ESG, but it's easy to say, as I said, in terms of talking about it as a policy, but to translate it to become an actionable item. And this is where the challenge is. And I'm very glad that we are discussing about this today. And I'm sure David, Mehdi, and yourself, Edmund, would have certain ideas in terms of how this can be done going forward. Thanks.
Yeah, I think that raises a very, very important point. When technology company, they are trying to grow and survive on a daily basis, right? So how can they draw the line between internal policies, governance, the structure in place that enable them to do the business fast, as well as in a more compliant way? That is always a challenge. That actually may be related to a point that you previously raised as well about the regulator. I think they're also in a very difficult position because some companies like yours, on the panelists, are very, very good companies, but there are also other companies who are less prepared. And as a regulators, and they might have sometimes like difficulties in distinguishing like whether like someone is good or bad. So it collectively we need to make sure all these are in place and build a model and time will tell, as David also mentioned. So let's look at these subsectors, because we always talk about like financial inclusion, but there are actually quite a few number of subsectors, right? We have like payment, remittance. Many people are saying, now is a pivotal point already that we have a huge growth from now on. And also we also have lending, which is a very large and important element, as well as some growing area like insurance and investment. You guys have been experts in this subsegment. May I ask Mehdi, on payment and remittance first, what are the particular opportunities and challenges in these two areas?
I think the main opportunities is like decentralizations. Actually, like previously the remittance was like people send from bank account to people's bank account, but that sometimes actually is not convenient at all, because the even receiver side banks may not work all the times. But now the remittance are actually changed to wallet, like for example, from myCash wallet in Singapore, you can send money to China Alipay account actually. So it's becoming very, very easy, very, very convenient, and this works 24/7. You don't need to wait for the banks to open or anything like that. Is immediately your families can receive the money and then he can use it. So I think this is one of the things that happening. So not all countries actually still have this actually, but we're already working with some of the wallet players. So and I think I really believe that this will be the future of the remittance is wallet to wallet. People will not send money to bank people will not send money to cash pickup network anymore. They will actually use wallets, so that actually the network of wallets will be the next SWIFT or something like that actually in the future. Yeah, I think for payments and remittance, I think this is the one of the key things that will be happening in next 2-3 years time.
We also noticed a lot of wallet companies, right? So probably there are a few tens of it in Southeast Asia. How did you choose your partners in doing so?
Normally, we try to find the most popular one. Like for example, in Bangladesh, we are working with bKash. So bKash is one of the largest wallet actually by far, and it's partially owned by Alibaba Group actually. So they have 30 million customers actually. So we work with them. We have direct API with them actually. So we know that there is like around I think 30-40 wallets in Bangladesh, but we are connected with the bKash because every adult in Bangladesh got a bKash account. So we try to find something like that. Like same with Alibaba. We work with Alibaba because in China almost everyone, I think they are the second largest wallet. I think they're the largest after the WeChat Pay actually. So we try to find the most popular one and to try to connect with them because we know that if not, the people will not use it actually.
Well, ultimately, do they also require some cash collection points too, like in some remote villages?
Yeah. So like for example, bKash, they have the widest cash out points actually in Bangladesh. So even in the remote villages, you can actually cash out from a bKash agent shop actually. So that also we take into consideration, like how many cash out points they have and whatever the villages and the not city areas actually. So that we take into consideration also.
Yeah. Well, thank you very much for the insights.
No problem.
And David, how about in the lending part? You're the lending expert, right?
Yeah, Edmund. Actually, I was listening keenly to Mehdi's comments, and it's very interesting because you need to have the infrastructure on the payment side first with the wallets or with either with cards or traditional form of payments before you can do the lending, right? Because you have to move the capital. Obviously, for remittance, it's a bit more like transferring of capital. But sooner or later, these apps from moving of money, they do move into credit space, right? Like you think about companies like Square, like Stripe in the US, and even Ant Financial in China, which does happen to have the most robust credit analytics, I think. But then you move to the fact that with the payment system, you see the technology coming in, and I think that has a great impact on inclusion because someone on an island in Indonesia without a bank or just with internet, they can actually start to move money. They can maybe accept money from working kids in the city, for example, and actually you do it at a cheaper rate, right? I just sent some money to my dad in Taiwan this afternoon, and I wouldn't say which bank, but the bank used to charge me $200 per transaction. And I think thanks to all these payments and TransferWise, today I paid $20. Still expensive, but it's 10 times cheaper, right? In the last 2 years. So I do think it does reduce the cost, because a lot of these payment companies, they're just matching at the back, right? They do a wholesale transfer and then they do the individual movements. It's literally like moving a digit, right? So I think that's interesting for us in the lending space. There is a lot of opportunity. So you have seen, I think maybe 200 to 300 companies in Indonesia alone come out and try and do lending. Just to clarify, at Helicap, we don't do the origination directly. We are a B2B player. So we actually have assessed more than 300 lending companies. And a lot of people think we only do digital, but we also look at a lot of traditional players. So I think like Indonesia, you have more than 5,000 microfinance / they call it multi-finance companies, in Philippines as well. And these have traditionally been where the access point for customers to get credit or banking services. Some do it really well, but a lot are really micro SME kind of level, right? But I think the major difference, and when you look at payment and lending, it's a highly regulated industry. So the players need to have a certain level of professionalism. It's not like going on an e-commerce and selling something. I mean, it's regulated as well, but this is managing of capital, right? So I think, to be honest, Southeast Asia regulators are quite forward-looking. So I think in countries, Indonesia, Philippines, Singapore, Malaysia, Thailand, Cambodia, for example, I think digital lending slash P2P has been given certain sub-licenses or main licenses even. That's something we look at which is super important. And I think the other point which Rizwan said just now about the whole space being a bit too aggressive or chasing growth, I think that's something that is important, because when you want to do business where you want to benefit, certain segments which the bank may classify as risky, you have to be a bit slow in your underwriting process and to understand your customer profile a bit better, because you would have to reject a bunch of them, but you would have to experiment and also accept some of them. So I do think that what we look at is risk management practice, how established is the team, how are their models working over time. We track a lot of our companies daily or weekly, and through this data we get a lot of insights. The good news is that, to be honest, the NPL ratios have not blown up as badly as we would have thought this year. I think there's a lot of Southeast Asia is a place where, given the shocks of 98 and 2008, I think a lot of the corporations are generally quite prudent and careful. So we have seen, and also the governments have come in quite strong to support, either helping the borrowers, with certain cash grants or time grants, but they also help the SMEs in the space as best as they can. So I think we continue to see a lot of very robust movement in the space. I would say that banking community and lending probably got to start to take a look at tech companies that might actually come and eat their lunch. You have, as the best example is probably SEA in Singapore, listed in New York, and they just got a digital bank license in Singapore on Friday. And that is a phenomenal competitor because they have the tech, they have the talent, they have the customer. Right? It will take them a while to learn to be a bank. But this is something that I don't think we would have imagined come so quickly, because they've been given a full banking license as well, right? So this is something that we can look forward to. And I think for us as an asset manager, we keen to work with banks as well to take use of their book, to purchase some loans if we can. So I think this is the other stage where, with technology, investors are able to have visibility on what they're investing in. And I think that's quite important. Yep.
Thanks a lot, David. A lot of insights. One of the key area of lending is credit, and credit analytics, right? So, and very encouraging. You mentioned the NPL has not been, as bad as expected. And is it because your credit system or the data collection infrastructure now has been improved substantially? Besides the support of the counterparts that you just mentioned.
Yeah, I think a lot of companies on the lending side, they actually saw the risk coming and they reduced their lending. And I would say second and third quarter this year, and obviously that has an impact on the revenue. But then again, that also helps them to. It's almost like you take a break for 2 quarters and reassess the risk. And we can see in a number of companies the volumes start to come back, and definitely the risk premium is higher. So I guess if you want to borrow now as opposed to a year ago, arguably the interest rate should be higher. But I would say, because customers, consumers, MSMEs and SMEs, they also tighten their wallet a bit and they control certain costs or they spend less. You have an effect where it's a bit balanced, right? I think the challenge here, and to be honest, this is really a COVID situation, is how long will this last, right? And the faster it's over, the more you can then resume to normality. But the fact is that if your business has a digital angle, it's actually likely you would make more money, or you would get better traction, because people are going online a bit more. The digital transformation has been accelerated. The key question is, how are you going to benefit from it? How are you going to benefit others from it? I think that's something that it's more of a answer for operations for next year.
True, very, very true. And we notice, in some countries, P2P continue to prevail, and develop healthily, but in some other countries, for example, China, they stop the P2P entirely. So from this perspective, do you think that we some changes in the P2P world in Southeast Asia?
Yeah, we're definitely in for consolidation. When we started the business 3 years ago, and then 2 years ago, everyone's like, okay, Southeast Asia is going to follow China's path, and there would be no obvious licenses carved out for P2P. I don't think there are any at the moment. And then you see, to be honest, you see Ant Financial having some challenges with the IPO. Don't have a view on that, but there are a lot of facts on that, and I think a lot of investors were piling to it. For whatever reasons, the regulator decided to take a bit more time to assess the situation. I think because Southeast Asia is so fragmented, and it's not like you have the two big countries, right, are islands basically, right? So Indonesia and Philippines. If you look at a country like China or India, it's one mass. So things are it's easier for things to happen, easier for transportation and communication. But I would say that's probably the reason why digital lending has a bit more wind in Southeast Asia. Plus, post-COVID, I think my analyst told me yesterday that there were a lot of reports. I think Citigroup came out with a report saying that investors' capital is moving to Asia very rapidly, if not already, because it's seen as the area with the fastest growing emerging markets. I think mostly because of opportunity and political stability. So we would see a consolidation space. The place that we're interested, right, is how do we get the traditional microfinance players to be more digital to compete with the P2Ps? Because these guys already have the license. Maybe they've been operating for 20 years. They just need a bit of help to tweak it. They need one white label some technology for them, and then they transform the company a bit. They can actually raise more equity based on that new story. Because a lot of them actually, we've studied, they're actually profitable companies. It's just that they grow, organic growth, 10% a year, 20% a year. And then they have access to maybe even 100,000, 500,000 customers in a certain small region, but they're doing a great job. And our goal is actually to find these guys and help them, because to be very honest, they are probably doing the best job in financial inclusion, because the strong players get a decent cost of capital, so they don't have to charge so much spread to take on the risk. I think you see a lot of P2Ps. It's a risk mechanism. It's not really. It's just the pricing of the market, right? So what you also want is for consumers to gain access to affordable financing, but yet for the financial institution to make a margin and to stay relevant. So I think there's a bit of an adjustment there. We're really keen to help traditional MSMEs. Our current portfolio is 80% digital and 20% traditional. I think, for me, I think 50-50 would be a nice reflection of that.
Yeah, a combination of sources of funding as well as the operation mode seems to be more suitable for such a diversified environment. Which one? People say when like consumers have the basic infrastructures and they start borrowing and lending, then the business and the personal wealth may be more like liquid, and maybe some of them, especially when they reach the middle class, you start thinking about, insurance and investment. So how do you find a situation in Malaysia and in Southeast Asia? And what would be the challenge and opportunity there?
Thanks. I think insurance largely is really, really low penetration in Southeast Asia because as you say, if you look into the unserved and underserved, there's no capabilities currently for them to be able to afford with the current structure of how insurance and in a certain sense the Sharia side called takaful is working. Secondly, there's also a lot of hurdles in terms of giving them the right kind of awareness in terms of what and how actually insurance work and how actually it creates part of the jigsaw in terms of them knowing how it can enhance whatever wealth that they have created, protecting it, and even to a certain extent enhance that wealth through perhaps investment linked product, for example. But one of the common theme that I've seen in insurance and takaful is the inefficiency in terms of the distribution channel. And this is where a lot of concern raised by the consumer in terms of how expensive it is to actually have a coverage on insurance because of the inefficiency in one, on the distribution, and then secondly, in terms of how the underwriters actually do the underwriting in terms of coming out with the policies and coverage. So these two aspects are currently being focused at by many insurtech companies in terms of either disrupting them from making sure that the distribution is much better, and then also focusing on how the underwriting side can be innovative enough. I've actually discussed with quite a few companies that's focusing on crowdsourced insurance, where there's a model already happening quite long ago in the US, as well as there's a Singapore company that's already doing it for the last 3 years. But what I'm getting at is the insurtech company is also not just looking at making sure that the distribution is better, the underwriting is much more efficient and more cost effective, but also looking at how it can be angled towards making sure that the offering is not one-sided. Currently, if you're talking about insurance, the terms and condition and how it goes is all dictated or majority dictated by the underwriters. So now there is actually effort to make sure that it comes from a consumer side and making sure that a policy and whatever coverage can be customized, and technology has been helping that. And this is where, from policy perspective, we have had quite a aggressive discussion with the policymaker in terms of allowing an innovative either underwriters or brokers or even distribution channel to come in and either challenge or work together with the incumbent in this space. Yeah, so this is where I'm very excited to share with you guys. But the one, as I said earlier, the key cornerstone challenge remain about awareness of the unserved and underserved about how insurance and takaful work. That requires a lot of effort in terms of making them to understand, because it requires detailed evaluation of how policy work, how coverage work, how distribution work. And then on investment side, I'm seeing a lot of new portfolios coming from either the asset class or the way the offering is being made by robo-advisors. And then I'm seeing currently re-engineering of how fixed deposit is being offered in the market, as well as the ability of some of the robo-advisors to offer alternative assets in the form of digital assets. So these exciting new segment of the portfolios are actually offering a better profile in terms of how investment, especially in the fund management side, is now being offered to the market. And I'm also seeing that the costs in terms of capex and opex of running an investment management firm is getting lower because technology is now available, and the transparency both to the consumers, to the regulators, are now much better, and that actually have encouraged a lot of mushrooming of a new kind of either a digital investment management or robo-advisories company to come out, especially in ASEAN. And these give opportunity to unserved and the underserved to invest at a lower entry, because last time, if you want to go into an investment management, there's a minimum entry, which is not that minimum. And that's why the underserved and unserved are not able to enter. But now with robo-advisory, with digital investment management and lower running costs, this has been made possible. And I'm very excited. It's very excited to see that there's also a potential that all these investment as well as the insurance product can be rebundled with the up and coming digital bank platform that's now coming up in Singapore, in Hong Kong, in Malaysia. So that is another aspect where it will change the profile of how this offering will be made to the unserved and the underserved. Yeah, thanks.
Well, certainly, we also see a lot of impacts by technology, especially reducing the cost, enriching the product offering, like also the start of the digital asset space, breaking down large product into smaller product into smaller pieces, such that it can be distributed and bought more broadly. So, I'm very optimistic when the population and economy continue to grow, then this area will be the next engine of growth. We were still in the kind of the midst of a COVID period. We have some vaccines coming here and there. There are control, very effective control in some countries, including like Singapore and Malaysia, and but other parts of the world seems to have a little bit the time to handle. So from that perspective, the virus has disturbed the plan of many people, and when you see the financial inclusion strategy as well as implementation in ASEAN country, do you see more negative impacts or more positive impact? And what would be the situation afterwards? Mahdi, maybe we can start with you.
For the COVID this thing. Sorry, can you again repeat the question?
Yeah, it's basically impact of COVID.
Okay. So I think the COVID is actually helping us actually. So some of the places like because we work for the migrant workers, they're very, very tech diverse people. They don't like technology. So COVID actually forcing them to use the technology actually. So for example, the remittance scenario in Singapore, like how they used to do the transactions, but now they're not allowed to go out from the dormitories, so they're forced to stay in the dormitories. So during this time, now they're learning how to do remittance online. So it's a blessing, I think, for some of us actually, because these are giving us a fade on to get more customers, and then actually I think in the long run it might be a challenging a bit like to keep them, but I think now they are getting a good experience, and their experience is so far good, and they're learning that this is way convenient than what they are doing before. So hopefully, I think this is a boost for us actually. So we think for MyCash actually is a positive impact.
Sure, I think that's one of the advantage of a digital tools, where like what we are doing now is it doesn't necessarily have to be physically present, and they can do it more effectively. And which one do you see a similar situation? How about the non-tech aspect?
Yeah, I think the brick and mortar businesses at the beginning of the COVID were struggling in terms of understanding the impact of what COVID brought to them in terms of how they want to adjust themselves. But I think after about 3 months, maybe in June onwards, that behavior change starts to come, and quick adjustment in terms of how they foresee and look at what kind of alteration that they need to do. Most obvious is in terms of, as an example, looking at the food and beverages businesses. Many of them, when they started, they have this fixated idea that they need to have a place to cook, and then they need to have a place to sit for people to come and enjoy their services. But after June this year, I've noticed that many starting to even thought of the idea of central kitchen, thought of the idea of sharing resources with other businesses in terms of either on the purchasing of the raw material, in terms of purchasing of customer database, because people do not eat the same food every day, and they discovered that by working together on a digital platform, the economies of scale can be achieved much faster. But the fundamental is this is still a brick and mortar business. And they notice now that they don't need to digitize end to end. What they need to digitize is the capabilities to be noticed in the market. So marketing have to change, brand presence has to change, and then in terms of how the distribution can happen. And also, one of the three revenues that we notice in F&B is it's not the selling of the cooked food, but the top revenue actually is selling of frozen food. That's actually really, really doing well. And one of the companies that you can see really doing very well during COVID is a big giant from Thailand called CB Group. Yeah, so they yes, before COVID, they have actually a chain of supermarkets and whatnot. But when we analyze the revenue that they made, the frozen prepared meal is one of the highest grossing revenue that they have. And this is where, with or without COVID, the ability to actually make use of the logistic, and because you are selling frozen prepared food, it has longer in terms of consumability rather than selling freshly cooked food. So this is the kind of innovation that's happening quickly, and a lot of others, including the smaller MSME, are learning from the big giants. And then this is why I think there's a lot more positive that's coming on board, not just for F&B, but also for, in terms of fashion and all those stuff, that's actually learning very, very fast in terms of how to adapt and using relevant technology and innovation in their business value chain.
That's really encouraging. There are some threats to business, but if we are flexible enough to change, our business model, there's actually a lot more opportunities behind. So thanks a lot. David, did you see a similar phenomena?
Yeah, definitely. I think a lot of adaptability we're seeing, a lot of change. People generally are very resourceful, I think, and most people have learned to find answers online to adapt. So I think that's very interesting. For me, I think COVID, the first quarter, second quarter was really stressful, especially second quarter. I think now people just understand it a lot better, take the necessary precautions. But I would say globally for the business world, there has been a huge awareness for, things that are more sustainable, right? In terms of health, in terms of environment, in terms of relationships with people, and a bit more inward looking as opposed to us always chasing dreams outside or looking for stuff tomorrow. I would say in relevance to that, impact investing is going to be a very big trend after this, because you will find a lot of companies or just corporations or governments, private funds, non-profit foundations, family offices want to do investments in the right way, and they will allocate, obviously most of the capital is for return, but they might allocate 10% of the capital for impact, also with a return. So I think for us, we were very privileged. We'll announce this soon, but we signed a mandate with a Japanese financial institution to help them to look for impact targets in terms of the debt space. And this links up to what I mentioned just now about looking for more microfinance, companies that are a lot deeper penetrated into regions that really need the help. So I think that's an area I find is fantastic, and then gives us some hope for next year and the future as well.
Yeah, just follow up. The impact investment and impact financing office is very, very meaningful. At the same time, basically, we may not expect a very high margin of it. But do you think it itself can be really sustainable in the longer run? Impact financing.
Yeah, so you see that having quite a lot of legs in Europe, especially, and the US, where I think the market is a lot more developed. There are initiatives to help not just your own countrymen, but people outside the system or outside your own country. So I think that's really great. And there are a lot of companies that have built a sustainable business on doing the right thing in the financing space. Edmund, you are absolutely right. The rates obviously would be lower. And to get that, you probably need some kind of cost of funding, either from a bank or some organization. So that is an area you have to balance return with finance. But then again, on the flip side, on the risk side, if you look at the lending space, most of impact investing actually has a much lower NPL. So you can argue that in a stressful situation like maybe COVID or a downturn in an economic cycle, they may actually have more legs. It's almost like the tortoise running the race, right? They might actually win.
Yeah, true. So, looking forward, in the shorter term, let's say in a year or two, on a longer run, in about 10 years, what's your vision of financial inclusion in Southeast Asia? Mahidi, can you talk about your views?
Yeah, I think especially the underbanked or underserved, they should have some specialized bank, a digital bank for them to serve their needs. Because in Singapore they already started to give license to Singtel, Grab, and see two companies already did the full digital banking license. So we hope that, because for example, in the Singapore, the only underbanked or unbanked segment is this foreign migrant workers. Every Singaporean has more than one bank account actually. So when this Grab or Singtel or even C, when they want to or start their banking platform, they might need to look for these people, those who do not have a bank account, or those migrant workers, those who do not have insurance or savings, do not have anything. So maybe they will target them actually. So I anticipate that in the next 2-3 years, this migrant worker might be a hotcake for the new digital banks, and serve them their needs through their technology. Yep, I think that's I'm hoping to.
Sure, there'll be much more like different product offerings afterwards.
Yeah.
And we go on. What do you think? Do you expect some more innovative products to them?
Yeah, I think the fundamental in terms of you mentioned just now, what's the short term and long term outlook. In the short term, I think what's really need to happen is for the credit evaluation approach to be relooked and thoroughly be analyzed. Because if you look at the traditional way of looking at credit evaluation and credit management, the static approach of looking at what happened in the past, how do you pay, your behavior before, and what kind of credit do you have, that is really, I think, in my point of view, it's outdated. You need to have a combination of that information plus with the alternative credit information that will give you a true picture of whether a person has a capability at a single point of time, as well as a combination of a view in terms of whether he or she has the capability to fulfill the future obligation. The incumbent banks look at a static information and decide that, hey, he or she doesn't have the credit worthiness for us to serve. But if you combine the alternative credit information, then there will be a different aspect, a more dynamic aspect in terms of also looking at the capability to serve the future obligation should the lender actually give the credit facility to that person. And this is where the awareness from the supply side and the demand side, the lender and the borrower, need to have a new, fresh outlook in terms of how to evaluate risk and opportunity. Because currently, no matter whether if you have a digital bank or advanced technology, but if the way you look at credit is still the same, it's not going to solve the issue. We will still have the underserved and we will still have the unserved. So I think that's really important. And going forward, if this can be done now, 10 years from now, I think the underserved and unserved would depend on how knowledgeable you are in terms of what's available in the market. No longer about what you are, and it depends on how do you want to actually go forward in terms of looking for different kind of credit. So it depends on individual in terms of wanting to. So if that happens now, I think in 10 years' time, we probably will not have that definition of unserved and underserved anymore. Yeah.
Sure. I totally agree. David, you're expert in alternative, credit as well as model, right? Do you have anything to add? We have about 1 minute. Probably you can answer in 2-3 sentences if you might.
Sure. Yeah, I think hard to say what's the outlook 1 to 10 years. I expect we're gonna get a lot more lazy now because we can do everything on the phone, including ordering your McDonald's from across the street. But yeah, I do agree, Rizwan. It's this part requires a bit more. It's more complex on how you approve loans and make the money move in the right fashion. I think it will evolve tremendously. Maybe now it's 20% alternative scoring, 80% traditional. I think it'll move to 50-50. And there may be some industry standards that we picked up. So hopefully we're at the forefront of it.
Sure, and hopefully, in a few years, the financial inclusion will improve the underserved and unbanked population. Now, like we know, there are about 70% of consumer are underbanked and unbanked. So, my last quick question is, what's your view in 5 years? What's that number would be? Let's meet in 5 years and see whether it's accurate.
Mine is I'm optimistic, so 40%.
Okay, Happy?
I think around 50% or more.
Okay, Sivan?
Well, I'm very, very optimistic. If we can get the credit evaluation change, I think we would have very, very small number. I mean, even just 20% of the unserved and underserved.
Wow.
Okay, let's see what happened in 5 years. Thank you so much for today, and it's my great pleasure in discussing and sharing the views with the viewers. Thank you.
Thank you very much. Bye-bye.
Everyone.
Bye-bye.
Thank you.
Bye-bye. Edmund, thank you.